Mr. Price Group is a value-oriented, cash-only fashion retailer. They retail apparel, homeware and sportswear and have a market cap of 36 billion rand. The group opened 17 stores and closed 3 since the end of September 2011. It has a price-to-earnings ratio of 28.65 and a dividend yield of 2.2%. Why did they close down 3 stores? Anybody know that level of detail?
I think it's just again about store relocation. In other words, they'll put one into a new sort of Greenstone mall and then might close down the one in Edenvale. It's that kind of scenario, so nothing to be worried about there.
Viv, you're not worried about the share price if you're a current shareholder, are you?
No, most certainly. And that's one of the issues I have with this company itself. It's a great company, but the price is just so high at the moment that one might wonder, is there still value available in it?
Is there still value available in it, Paul?
Well, look, they're a very talented management team and very well organized. They've had lots of sort of organizational progress, one departing chief executive replaced by another insider. They've done the procurement particularly well. I think you know if you go into a Mr. Price store, lots of quick stuff that comes in and goes out, very cheaply priced. They do that whole thing where they see what's hot in China, in Europe, get it made in China. It's on the stores a couple of months later. They're not just in clothes; they're also in accessories. I prefer the clothes to the Mr. Price Home side of things, but you know that's just a personal preference. I think they can go higher and further.
We're noticing a trend.
You know,
generally, you prefer
they're really mostly just
side.
here, and they can continue to roll this model out to neighbouring countries. I think they're going to continue to do well. They're at 143 or something. It's a high PE. They're at an all-time high. But I think, you know, if you look back at the chart, they were also at an all-time high at 70 Rand in 2011.
I want to go back to those international investors. What happens if there's a risk aversion story? We see more negativity coming out of South Africa and suddenly we see foreign money going out of the country. What is going to happen to our retail stocks? Another way to phrase that is to what extent are international investors propping up the local retailers?
To an extremely large extent, far more than most other sectors in the market. In fact, if you look at most analysts in the last few years, they would say you've seen a huge chunk of our retail has been taken up by international investors, etc. Like I said, they don't view us from a South African point of view, they view us from an African point of view. And from that point of view, the growth story is just quite strong in this country.
Paul, you don't see it as a risk because you've got nothing but positivity to say, or positive things to say about the sector.
South Africa, everything is perfect, but there's plenty of room for improvement. So as far as the South African retail scene is concerned, I expect that to remain strong. I don't think the political risks are going to change that much. For me, the real exciting thing here is that they've got the multi-brand strategy as well. So they've got the Mr. Price Sports thing where they make all that maxed or maxed or whatever it is. They sponsor the Sharks. That's huge. Those guys keep winning.
I've got a question for you. Do you not think that you should go into this arena? You should basically be heading up a retail operation, multi-branded retail operation.
I should do the investor relations, you see. I could just tell shareholders all the time how lucky they are to own these shares.
But are you still buying at current levels?
We have had, and we've been accumulating them, and we've been in this stock and a couple of the other sort of high flyers. Look, there are days when I wonder whether, you know, this kind of...
When you worry about your high level of conviction on these stocks.
You know, stock is almost parabolic. But I think it's more a case of the stock having traditionally been a bit underappreciated and underloved. And it's really delivered fantastic earnings growth.
Do you buy into that thesis that it was undervalued, underloved?
I don't think it's by any means underloved if you look at that share price.
Not anymore.
How much more love do you want on a stock, Paul Theron?
Well, I think it's just about scale. I mean, they're opening new stores all the time. We know that there are still a lot of the mall developers that are busy expanding. You know, almost every mall in the country is being added on to or an extra floor added and so on. And often they put an even bigger Mr. Price into these places. I don't see the credit issue. Remember, these guys are not involved much with credit extension. They leave that to other people. So if, you know, African Bank or Capitec or some other JD group has some sort of problems with regard to credit extension, it's not really Mr. Price's problem. Their customers will just get the money from somewhere else.
Hot or not on Mr. Price? Viv?
I like the company. Unfortunately, at this price, I think it might be a bit too expensive. If you look at, for instance, the growth in sales, even if you assume like a 20% growth rate for the next few years compounded, it probably would take 5 years to justify this kind of price level. So that's why I'm a bit nervous about the stock at the moment. So I think it's a great company. No, by no means I think it's a bad company. I just think the price is a bit too high at the moment.
But Paul, you believe investors are going to show more love, hot or not on
because,
Mr. Price?
You know, end of October, the trading update showed earnings would be up another 35%. If they can continue to deliver that, then it doesn't look so expensive in future.
If they can continue. It's hot.